Hello, and welcome to another Tax Talk Tuesday. I'm Nick Benson, a staff accountant at JAK CPA. These days, it seems like everyone has got a side hustle, whether it be selling scarves on Etsy, driving for Uber, or even taking private art commissions. But in the modern gig economy, it can be difficult to determine what counts as a business and what's just a hobby. For tax purposes, it's better to be a business. But how can you know the difference? For starters, a business is something operated specifically to make a profit, whereas a hobby is more for fun. But as we just discussed, that line can be really thin at times. For example, a lot of people who sew for fun could just as easily be selling their work. Fortunately, the IRS has provided guidance on exactly this issue via 9 critical factors. The first factor is whether the activity is carried out in a business-like manner. This is somewhat vague, but a good indicator is how records are kept. If you track your side hustle's finances in a more organized spreadsheet, it's more likely to be considered businesslike. The second factor is the time and effort put into the activity. The more time put into the activity, the easier it becomes to argue that it's conducted for profit. The third factor is dependence on the activity. If you depend on the activity for your livelihood, it's probably a business. The fourth factor is how any losses came about. If your business is losing money, is it because of a tough market? Or are you simply operating in a way that is bound to not have any profits? The fifth factor is whether you change your methods to improve profitability. If you can demonstrate that you adapt your activity to the market, it's much more likely that it'll be considered a business. The sixth factor is whether you can show that you or any advisors you have the proper knowledge for the activity to be a business. This can be demonstrated by greater than amateur knowledge of whatever activity you're looking to make a business out of. The seventh factor is simply whether you've had any profits from similar activities in the past. If you have, it's more likely that your activity can qualify as a business. The eighth factor is how much profit the activity makes and how often. The more consistently your activity turns a profit, the more likely it'll qualify as a business. The ninth factor is whether assets involved in your activity may go up in value. If you use assets such as land that appreciate in value over time, the IRS may consider this in lieu of profits. Ultimately, the IRS wants you to make money so that you can pay taxes. So if you have losses, be prepared to justify them. 9 factors are a lot to take in, so make sure you reach out to your tax professional with any questions.